All right. Let's see. We're live. Let's wait for the socials to get their act together. There we go. It takes YouTube a little bit longer than everybody else. Let's see how long it takes. Oh, there we go. 20. Oh, we'll get to it. All right. We'll get started here. Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hey Kirk, happy Friday to you. The summer is what would I say? What did I see? Was it a week ago? A couple days ago, we hit the middle 50% point of the year. So we're on the downhill slope for 2025.
Thanks for reminding me. It's all downhill from here, Doug.
All downhill from here.
All right. Well, it's been a long week. I was on vacation last week. It was in Michigan. It was beautiful. It was hot, and the water was cold, and the water toys were fast. So it was good. It was a good week. And I took so much time off, I didn't know what to do with myself. So I came back and decided I'm going to go buy a house. So Doug doesn't even know this yet.
I had a feeling based on some of the questions I saw this past week. So yes,
we
did you buy it? Is it done?
We did. We got an offer. It got accepted. So we're moving ahead.
Congratulations.
30 days closing. we're just trying to get it done. Yeah, we were up in the lake. Took some time off, visiting family, and I wish it was my lake. It was beautiful, but fortunately we have family that has a lake house, so you don't have to get your own. It's kind of like a boat. Just know a guy with a boat. You don't have to own a boat yourself. So it was nice. It was a good week, and we were just realizing that we just need to make the break. Same thing actually happened to us in COVID. We were living in the city with our two young boys, and it was getting a little small. Like, we had a relatively good sized place, and for the city, it was like 1,120 square feet. Like, but for two boys, we needed like 5,000 because it was their boys, and they just want to run everywhere. So it got a little tough. But COVID kicked our butt, and we decided, you know what, we got to do it. We can't stay here. We spent 3 months down the beach by ourselves during COVID because no one's down there, and everyone was afraid, and we were not.
It was dangerous to be in the sunshine and the open.
I know vitamin D is dangerous for you, and all the fresh air that's bad for you too. So
you're lucky they didn't plow over your beaches on that side of the country.
Well, I was wearing a mask, Doug, so I was safe.
Of course, well, that's good.
I actually was wearing a hazmat suit just in case the fishes had COVID, or maybe the sand crabs had COVID. I was extra protected, so I'm good.
Listen, I still think my favorite thing during that time period was going into stores and seeing people that would take like safety goggles, turn them upside down, and put them over their mouth as a mask.
I saw some funny things that I don't want to disclose here on the show because they're a little bit R-rated, but there were some funny masks out there. That's all I'm going to say. But anyway, so when we got back, we realized we can't do this. Like, we're done. So we ended up moving to the suburbs, and we weren't ready to buy because we still had our condo. So we rented, and we've been here for 5 years, and it was a good move. It was like we paid like 70% less to rent than it would be to own this house. I was perfectly fine with that. And we had time. Then we started to realize that real estate market's not going down, even though it should, even though no one can afford it. Apparently people in Boston have lots of money and they don't care, and they just spend on anything. So people just throw money around. What?
I've heard that rumor.
Yeah, it's bad. Other parts of the country, real estate's coming off, but in Boston, it's still not. Anyway, so we just got to this place where, like, we're never going to be able to afford here if we don't put our foot in. So I'm pretty convinced that I top ticked the market, and I think we hit the peak. I think we bought at the peak. I'm pretty sure of it. But at this point, it's a forever home. That's all we wanted. I don't really care. Price doesn't matter if you're never going to move. So so we put in the offer, and we negotiated. In this town in Lexington, you have 7 days. It's an open house. I'm sorry, not even 7 days. They list it on Tuesday. Open house Saturday, Sunday. Offers in by Tuesday. Every single one of them sells in Lexington. There's nothing that doesn't sell unless it's totally mispriced. And most of them are not. And most of them go like 10 to 20% over list price. That's Lexington. It's crazy. This is why we didn't buy. And we love the town, but we're just not. I don't play that game. As they say in the '90s, homie, don't play that game. I just saw an old In Living Color skit with Homie the Clown and Handyman was another great one.
We don't play that.
Yeah, there were some great ones. I'll tell you, those are great skits. Anyway, so we went in and we decided, you know what, this house, they overpriced it, way too high. And 2 weeks later they came off. 2 weeks later they came off. 2 weeks later, and I was like, you know what, these people really need to sell. So we put in an offer below listing, and we negotiated a little bit. We got it, and we're happy. Everyone's happy, and we're going to close quick because we need to move. Kids are going to school, all that. We're ready to move, so I'm super excited. I'm going to actually have a place to put in my sauna and my ice bath. You know, we didn't do it because we didn't know how long we'd be here. So all the stuff that I want, you know, having a anyway, I won't get into it. I'm going to get into crazy talk, but it's going to be good. So it's what we want. It's private sewer, private and public water. So we have a choice. And so it's great. We love it.
Hey, Kurt, I think a fun little flavor text, and it was a perfect segue since you talked about buying the house. I just put something in there. You know, if you were really smart about your money, you would have purchased in Pittsburgh, Pennsylvania, which is now the only major city in the entire country where it is cheaper to buy than it is to rent.
I would actually argue that point. I think it's not binary. So I actually did a real big study on this like 10 years ago. I was helping a client because she was wondering whether she should rent or buy. So I said, all right, let's look at the town. So what I realized, and this is Massachusetts, and I assume it's similar other places, but I can specifically say Mass because I did a lot of research in Mass, is that it's not a binary yes or no. And that's a pseudo, I wouldn't call it a chart crime, it's a data crime. It's a data crime, and it comes statistic crime.
And to be fair, it does come from Realtor.com, which is certainly willing to push the data a little bit to get it across.
I would actually call it a statistic crime, and here's why. So most people look at statistics and they're just like, oh, it's a number. It's like the CPI. It's a number. Oh, it's 3. It's 3. That's the inflation. No, it's not. It's an amalgamation of all of this stuff equals 3. You know, healthcare may be 24, whereas electronics may be -5, right? So it kind of aggregates it all into one number, and it's 3. And that's why everybody's upset at the 3. And I'm not saying it, I don't know what it is today because I don't follow it, because it's an imaginary number to begin with. It just doesn't make any sense. I don't watch that number. But the point being is, whatever the number is, whatever they come up with, whatever the government statisticians decide that this is the number we want, put the thumb in the air. Oh yeah, that's the number today. In many ways, it's the truth. But anyway, so the point being is, it's not a number. It's an aggregation of a lot of different stuff. So when you're looking at rent versus buying, and this is a good segue from my house purchase into investing, is when you're looking at renting or buying, everyone wants to own. And they want to own because, hey, I own this place. It's mine. You know, the men are like, it's my property. It's my land. I can, put my foot down and it's my stuff, right? Women want it because they can get a home. They can nest. They got that nesting instinct that they want. I know my wife talks about it all the time. She's like, I need a place to nest. Like, this doesn't feel like us. I'm like, I get it. So all of that's important, right? That's the emotional side of real estate. But the reality is that from a numbers perspective, it's the other side of the table. Now, here's the thing. People don't generally look at the numbers. They just say, oh, it's better to own because it's an investment. No, it's not. It's a personal expense. And if you don't believe me, send me an email. I'll send you our website. We've done a lot of blog posts on this. We have calculators. You can calculate it yourself. It is very clearly better to rent than to own financially, with certain exceptions. Mm-hmm. Now, here are the exceptions. It comes down to price. Everything else is the same. What it comes down to is price. So if you're in Massachusetts, if you're under around 750, 800,000, if you're under that, it's actually cheaper to own than it is to rent. If you're over that price, it's cheaper to rent than to own. And the reason being is the rentals only go up so far. So if you have like a $10 million property, you might be able to rent it for like, I'm guessing maybe like 8 to 10,000 a month, where that might cost you like 30,000 a month to own that property, right? So the difference being, I know around 1.5 million, it was, I looked at this 10 years ago, 1.5 million with relatively low rates, actually, and rates are higher than they were then. It was about 140,000 to support the property, and it was about 48,000 somewhere in there, like 40 to 48,000. I think it was like 48,000 to rent. Why would you ever own it? Who cares? Like, why would I ever buy that? It's so much cheaper. I'm saving myself basically 100 grand a year in renting. That 100 grand go to the market and grow it 10% a year, whatever it does. I could do something else. I could buy investment property with that money, and that will grow. Like, your personal property is not an investment. And people look at it wrong. They say it's an investment. It's not. It's definitely not an investment. Run the numbers yourself. You'll see it. If you look at the money you put in, the money you take out, it's better just to put no capital down, invest it, and you make the difference, and you'll be fine. We'll have a whole show in this. I'll take this and break it all down for you. I didn't come prepared today with it, but I can do that. If you guys are interested, just shoot me an email and I'll do it. But
I'd love to do it, Kirk, because I got 1,000 things to say about this.
Yeah, I mean, it's the math is the math. You can't you can figure with figures, but you can't figure with math. Math is black and white. So anyway, so I just want to share that. I haven't changed my philosophy. I still believe in the same thing, but there's a certain point where the emotion got the best of me, and I'm like, I just need a place that I can. There's so many things I want to do that I can't do here. Like putting a sauna in, which I can do, but it'd be a pain to remove. There's some other things I want to do that are heavy that Doug knows. I don't want to say in the show, but it's too heavy. So I was like, you know what? We're just done. Let's just do it. We have a place, and we figured it out and such. So the numbers aren't much different than we're paying now. So we're a little bit further out. It's not as expensive as here, but it's a little further out. But it's beautiful. Love it. My years, Doug, my years of vagrancy are over, and I'm settling down. So.
Well, I'm glad to hear you're not fleecing off the system anymore there, Kirk.
Oh, no, any chance I can get, Doug.
No, I think we do need to save this for another episode. But anybody who's listened to me for a while, this is absolutely a platform that I've stood off of, and this goes into so many decisions that people make. And you just, I think you nailed it. Buying a home is easily if not one of the most emotional decisions that people will make. And it's emotional from the time you consider it into perpetuity. It's emotional about where you're going to live. It's emotional how you get to decorate. It's emotional how you compare it to others. And I hate to say it, we say keep away from the Jones. Don't try to be the Joneses. Everybody does. If you're married, you're keeping with the Joneses, because everybody you're married to will tell you, when people walk into this house, what are they going to think, right? That's emotional. It's emotional in how you pay for it later. Do you put extra money down? People will sit there and they will throw away dollars to save dimes. They will. Well, I just saw someone's like, hey, you know what? I just gave up. I couldn't do it anymore. I took all my money and I paid off my 2.5% mortgage because I don't want to see it anymore. Absolutely terrible financial decision. Is it wrong is a different story. Because if that emotionally to you is something you can't get by, then your decision is very personal. Is it a good financial decision? Oh, heck no. Because what you just talked about is whether you own a home or you rent. Either way, you are doing nothing more than paying for a place to sleep. And you're going to continue to pay, because the new thing is we should get rid of property taxes. And I have seen a lot of posts recently about people saying, should we eliminate property taxes for the elderly? That's very controversial, because to me, one aspect to me, it says, yeah, if you think of them as a whole, a lot of them are struggling. But if you think of the baby boomers as a whole, they've had everything handed to them. And if you get rid of property taxes, you're just handing them another. And the reality is while the federal government can debt themselves into perpetuity by printing money, municipalities can't. And nobody likes to think about, if we get rid of property taxes, where do municipalities get their money from? It's going to have to come from somewhere else. And that means it's going to have to come from the youth, which are already being suffocated, or it's going to have to come from other taxes in other areas. You can't just eliminate revenue streams and magically fix magically keep paying for things. These things are real issues that have to come into place. So you never fully own your house. You're always paying something. You will always be paying for a place to sleep. And like I said, I'm not going to go too far into this, but that just like the person paying off their 2.5% loan, it is absolute terrible financial decision to take and give extra money to the bank to try to pay off your loan early. Kirk, what rate of return do you get on the down payment or extra payments to the bank?
None.
Yeah.
You make a trick question. None.
Yeah, no. Well, it is a trick question for most people because I think I'm paying it off. I'm losing interest, but you're losing the money that you give away. You will never earn another dime on. And so, again, saving the most for another day. If you have an extra $100 or $1,000 or $2,000 to put towards paying down your mortgage, in your idea of that is giving it to the bank because you're going to have your home paid off. Change your mindset. Paid off or paid for. You can pay for your home by putting that money to the side in a different account and not losing the money and compounding. It's like, well, but I could lose money in the markets. But yet everybody says you should have your money in the S&P 500. They clearly aren't worried about the down payment, the downside then. But you know what? Now, I just looked the other day, money markets and savings accounts, FDIC insured, you can get 5.5%, even 6% still is out there. You can get 6% on your money and save cash. We're not talking Bitcoin. We're not talking other investments. Save cash against 2.5% interest. Put your any down payment there. Guess what? You will, I can show you the math on this. You could have your home paid for faster than trying to pay it off because you're going to get return on that savings. And now, people are like, well, I did a 15-year mortgage so I could pay it off early. Guess what? If you did this side account, you would actually be able to mathematically have more money to pay it off before 15 years and still have money left over. So again, I'm not going to get deep into this today, but the home thing is purely emotional. And mathematically, and we say this all the time in the financial world, never make a financial decision with emotion. The reality of the fact is it's almost impossible to not make emotional decisions when it comes down to how you do your money. But if you can remove that, if we are able to act as robots and truly think of things financially and remove that emotion, there are so many better ways to stop unnecessary wealth transfers that ultimately cause you to lose money unknowingly and unnecessarily for the sake of stories you've been told, for the sake of marketing that you've been inundated with, and for the sake of emotional decisions that unfortunately truly cost you long term. And housing is buried at the core of all of it.
Yeah, I think one of the things that, I really enjoy the most about what I do as an advisor is having conversations with people. It's, if we were just talking about math, I'd be bored to tears. Like math's great. If you're smart, you could probably come up.
Why we have engineers, Kirk, and accountants. I mean,
yeah, but even they're restricted within the bounds of regulations and what they have to do. Engineers,
no, but they like those numbers to the point where that excites them. That's
right. But I mean, coming up with new cool theses of how the world works is great. But the reality is, like, people are complicated, right? And most people were told by, I think it was Fannie Mae. Fannie Mae basically brainwashed everybody to say American home ownership is what you need. You need the pride of home ownership. And they brainwashed everybody that you need to own a home. There's nothing wrong with that. Like, I don't care. Like, own a home, don't own a home. Once I realized the math behind it, I was like, wow, here's a little Wall Street secret that people don't know. Like, have you done the math? No one does the math. They're just looking at it and be like, yeah, I want to own a home. How much can I afford? It was funny. I was having this conversation with somebody yesterday. And it's fascinating. Like, when I grew up, so my dad bought the property I grew up in, bought the land and built it himself. Now, he didn't build it, but he was a contractor. He hired a bunch of people. And, back then he hired a bunch of, Italians that didn't speak English, and they're great stonemakers, and we had a driveway. Like, we had a stone wall. Like back then, it was just like, paying him cash. Like it was these guys off the boat, and they did a fantastic job. But built it from nothing. It wasn't a house there before. He paid his mortgage off in 3 years because he didn't like debt. Now he grew up in the Great Depression. That was a big deal back then. You lose your cash, but you keep your debt. Really? Like that how it works? So, it was a little weird back then in the Great Depression, and no one's really experienced that that's alive now. So it's hard for people to conceptualize. But, like his family moved every few months. Like they get kicked out of a house because they couldn't pay because they lost their job. Like it was a Great Depression. Nobody had jobs. So they get a house. They were in there for a few months. Oh, we got to move to another house, And everyone was like bouncing around. Sometimes he didn't have to eat. He'd steal like an apple off a neighbor's tree. Like we can't imagine how bad it was in the Great Depression, right? Even in our part of the country, which is generally considered wealthier. It's just inconceivable nowadays. Everyone's got so much abundance.
People were literally offering their kids up for sale.
What?
People were literally offering their kids up for sale in certain areas because of how desperate they were during that time. We've never lived anything like. We don't even have a clue.
Well, I know a lot of people were giving their kids up to other families or their families somewhere else because they couldn't take care of them. I don't know, they were selling their kids, but I guess that's no different from Pizzagate. So that's a little different. I don't want to go down that road. Sorry, I mentioned it. It was a joke. But anyway, so the thing is, and actually, the reason that came up is because I was buying a home. By the way, I'll talk through a bunch of pieces that I can educate people on. So one of the things I do is I freeze my credit. All my credit bureaus are frozen, always, unless I'm taking out credit. So I had to unfreeze it this week so my banker could pull my credit report. So I go to unfreeze it, and what do I see? I see, where is it? Did I put it on here?
That's this is what you were talking to me about. This is why I thought you were buying home.
I thought where did I send it? Oh, Doug, can you put it up there? I don't want to do while I'm talking, but
let me see if I can locate it. Sure. Yeah, hold on.
Okay, thanks. Yeah, so I go on to the credit bureaus and see if I can find it. And here it is. So yeah, let me send it.
Oh, yes, I've got it if you need it.
I got it. Okay. I'm putting it in there, so I'm good. All right. Sorry for the dead air time, but
Pizzagate. We're talking.
Yes,
we're talking. This is going to be a perfect segue to Pizzagate.
We're not talking about Pizzagate. All right. So here's so here's what I saw. So I'm on TransUnion. I go on the website, and here are my this is literally the front page. When you log in, this is what you see. This is like there's some things on the side, but it's like this is the front. What do you see here, Doug? Like which one of us is not like the other? I feel like I'm on Sesame Street, although that may not be around very long. This is Sesame Street.
For those of you who cannot see it, it says credit freeze, dispute, fraud alert, credit report, consumer statement, and the one that we all think about, human trafficking request.
This is literally one of 6 choices when you log into your credit on TransUnion. And I don't want to pick on them because it's on the other ones too. And it's like, what? So I'm looking at this and it says, and I want to read this for you audio viewers. It says human trafficking request. Start a request to remove human trafficking related information from your credit report. How many people does this affect that it's one of the 6 choices that need to be on the front page? What am I missing, Doug? Like, what is this? Like, is this Pizzagate? Like, what's going on?
Clearly, you're missing some children. I mean, I mean, there's clearly
someone is.
When I go to the airport, if you use the bathroom at the airport, on the inside of every door now, install it actually has a sign says if you're being trafficked, use these hand signals. I think it's this to say I need help. They say like something like 1 out of every 6 case come to. I can't remember exactly what it is, but. This is a real. People want to downplay this. This is a really, really big deal.
I have to say, Hollywood has been intermittently talking about this here and there, and some people have been talking about this. And I know this is a problem. Like, it's not in my world. It's not in Doug's world. Like, we're not in that world where we see this. There are parts of the country where this is more common, certainly in the border states. I know it happens. Like it's probably one of the worst crimes that you could commit. I imagine in prison they probably you're probably targeted. It's like the pedophiles they target in prison. Like I imagine this might be up there. Like this is a bad crime, but and that's all well and good. Like I'm not going to talk about the crime because it's obviously bad. But how is it so common that it's up there with consumer statement and fraud alert? Like, what? I don't know what are the numbers that big? Is it 1 in 6? Like, how many people are affected by this? And well, who is? And I didn't click the button because I was afraid to click the button. Like, who? Like, what would that do? Clicking that button, would it request to remove it? Is it on my credit report, like I'm trafficking children, or is it on my credit report that I'm an illegal? Like, I don't even understand why it's there. Like, what does it do? I don't want to click on it. I'm afraid. Maybe you can do it, Doug. You let me know what happens. Like,
well, here's the problem. If I click on your credit report, there's going to be bigger problems too.
Well, that'd be good because then I could say, hey, it wasn't me. It was Doug.
That's true. That's what we should do. This is a new system where we each hack into each other's credit reports so we can put a freeze on our report. You know, I think we're onto something.
I was just in Equifax. They let 500 million social security numbers, even though there's only 300 million people in the U.S. There's 500 million social security numbers they lost a few years ago, but yet I can't log into my own account. They like literally, I tried to log in and there's like a big error message that says, error message, you need to call this number. And I was like, what the F? Like, I can't even get my own credit, but everyone else can? Like, what's going on? I tried to unfreeze it and it gave me the same error message. I'm like, what's going on in this place? Like, clearly there's a problem. If you want to hack in, I'm sure it's easy because I can't get in. I'm sure everyone else is getting in.
Well, I want to back up a little bit because it's an interesting segue because you talked about the border states, and there's no question that human trafficking is incredibly problematic on the border states. A lot of stuff, been published about cartels. But this actually leads me to a very interesting economic data. I just saw a post speaking of the the border states and U.S. Latinos, Kirk, if stood alone, would be the world's 5th largest economy. The GDP, and this was based on 2022, but the GDP in of the U.S. Latinos would sit somewhere at $26 trillion. So,
I don't know how they calculate. That sounds like a number you couldn't even calculate. Like how
it's insane. And I might be reading that wrong because I'm looking at something that says it might be 4 trillion. No, actually, it's with nearly 4 trillion in economic output. Sorry, 26 trillion is the U.S. total. 4 trillion. My apologies.
All Latinos?
U.S. Latinos. U.S. Latinos trail only Japan, Germany, China, and the U.S. overall. So yeah, I looked at it wrong. The U.S. is 26 trillion. U.S. Latinos produce $4 trillion in economic output, which is just incredible. The influence that they have here, and obviously, the tremendous population they have, in the U.S. And so. I mean, it just kind of segues that back to an economic thing, because that is certainly an area where there is 6 out of 10 Hispanics in the U.S. come from Mexico. Colombians, Cubans, Dominicans, and Central Americans are also well representative and concentrated in southwestern border states. Florida and New York, California and Texas make up a majority of that population. Just very interesting because we know that there is a tremendous amount of populace here from those areas. But obviously, going back to what you're talking about, the cartels have had a massive pressure on that population. So
yeah,
I don't know.
It's something in the data doesn't line up. I mean, 4 trillion. I mean, they're only 28% of the U.S. population or something like that. So it's something seems amiss. It could be right. I don't know.
This is U.S. Latino GDP report from the World Bank.
Statistic crime sounds like to me, but yeah, I don't know. Is another weird thing I saw. Like, this was yesterday. I was looking for an inspector and I saw this. Like, I was on Google. I got the same thing on Google, by the way. I was on DuckDuckGo, but it was like, you're experiencing an outage. Really? Like, Google outage? Like, every search engine I went to showed this for like an hour. I didn't see the news on that, but it was really weird. So, all right, chart crime. Here's a chart crime. Since we're on statistic crimes today, I'm just teeing you up here, Kirk. Yeah, I'm on a roll, Doug. I'm on a roll. I got my energy up. So, all right. So here's a chart of silver. This goes back to 72, the peak in the mid to late 70s. Was it 1980? I don't know. This chart's weird. It's I know it's like 1980, but it looks like it's 72. So, all right. So 1980 peak silver was I don't even know what this shows.
Yeah, that makes sense. Right in the middle.
Looks like 37. I thought it went up to 50. So all right. This chart is already wrong because 1980 still went up to 50. So I think it's already wrong. But whatever. We'll move past that. And then we had in the I think 2010 2011 looks like it went up to like 48. I think incorrect. This is already incorrect. But anyway, this is a chart crime because here's what we're showing. Well, look at this. You know, it's up and then it went higher and to the moon. Look at this. It's going to the moon. Like this artificially created arrow that says, well, silver's going to the moon. Now, that being said, the silver bugs are out in droves because silver spiked in the last week and everyone's like, it's off to the races. We're going to have a rocket ship ride. Now, to be fair and to be transparent, I and my clients do have a position in silver and we are bullish on it. We've been bullish on it for a while. And so, but I mention this because looking at this, it's like, what kind of shenanigans is this? It makes it look like it's going to 100. Now, it may, and I'm optimistic that we're going to see another spike here. It's starting to spike up. We talked about in the show, like, why is it lagging? It's just weird. It shouldn't lag like this. And granted, now it's starting to take off. So it's lagging, and now it's starting to catch up to gold because gold is going sideways. So maybe it's playing catch up, which I would argue it is. It's still 90 to 1 silver to gold ratio, whereas it was up to like 110 to 1, and now it's down to 90 to 1. I think the lowest has been like 16 to 1. So we're still on the extreme high side. Still got a long way to go. But I wanted to share this because this is the kind of stuff I see every day. And I was thankful Doug sent this to me because this is really what I wanted to see. Is somebody who's super bullish on silver is getting more trigger warnings of how correct I am and get my own echo chamber of how awesome silver is. But the reality is this is the kind of stuff you see every day. Somebody sees a chart, they artificially draw lines on it, and they say, well, here's what's going to happen. And your brain, now logically you're looking at this and you're like, that's not going to happen. Now your brain says, oh, I see that chart, here's where it's going to go. And your brain subconsciously is going to put, oh, it's going to 100. Like, you're not going to think this, but your brain's like, silver's obviously going higher because you saw this stupid chart. So we see these charts all the time and they totally manipulate you. I feel it happening and I'm like, God damn it. Like, I'm seeing this thing again. Like, I gotta stop listening to gold bugs and silver bugs and crypto bugs and, perma bulls, perma bears. Like, everyone's got this bias. And unfortunately, there's no one who's not biased. Everyone's biased, including me. Maybe Doug's not, but I certainly have my own bias. But if you really think about it, like, what you're trying to do is you're trying to look at things without anyone else's opinion, so you can draw your own conclusions. And really, the best investing is done that way. That's why Warren Buffett lives in Omaha, not in New York City, because he wanted to get away from all of the bias, all of the selling, all of the basically mental gymnastics that go on in Wall Street. He wanted to be by himself with the annual reports, making decisions, and he did a great job up until, right around the early 2000s, and then his train went off the track. Forgive the pun because he invested.
Worthington Northern, you mean?
Oh. Yeah. Forget the pun on that one. But his train definitely derailed, and is thankfully his replacement has done a better job. Where they bought Apple and then they're out of Apple. Apple hasn't grown revenue in 3 years, so I think his replacement's doing a decent job. But I think good old Warren lost his way in the early 2000s, and probably should have hung it up then. But I guess when you're worth billions of dollars, you do whatever you want, and who's going to tell you any different? Anyway, so I don't know. What are your thoughts, Doug? I mean, we got a lot more charts to show here, but
well, actually, it's interesting you bring that up about Warren, because speaking of some of the changes, they have actually been, and this is a good segue to the other thing that we were talking about for the show, but they've been significantly reducing the stake in Bank of America, selling off a large number of shares. That's actually a 39% decrease in their position.
Oh, I thought they sold all of it. Do they still have some?
From what I've seen, no, they've sold over about 401 million shares, but they're not. That's still it's still Bank of America's largest institutional investor.
I remember they said they were going to sell all of it. I don't think they have yet, but yeah.
Yeah, they've got about 631 million shares remaining from what was about 1 billion shares. And by the way, going back to a kind of a segue to the whole conversation, I think it's really important because you mentioned the Great Depression, and I know we kind of drifted off of that, but you kind of just brought it back up here a second ago in something you said. Look, this is the reality of the way people make decisions. We learn from one of 3 things effectively. Number one, you learn from your experiences, right? So the decisions you're going to make going forward, this is a behavioral finance segue here. You know, if you went through the Great Depression, if everything you had, and when my grandfather and grandmother passed away, they had, you know, they used to build these houses where you'd have all these cabinets built in the walls, like these doors, these little hidden, and they were full of canned food that was, some of it had been there for decades. And it's just, they weren't going to change because they had seen and experienced that moment in their life that was so scary that they will never go through that again without being prepared. It's kind of the scout motto, be prepared. This person that you were talking about, same thing. Gen X, I was just looking at, you know, and again, you know, and we can come back to this, and I think in another conversation, I think it really plays into it. But looking at what Gen X cared about, we are the don't help me generation, right? But not really. We're the don't help me when I haven't asked for it, when I haven't identified that I know I want help. But we're very aware of when we do want help. We do our research. And when we want help, we've identified where our concerns are. And we have a lot of concerns about about volatility and risk. And we have a lot of concerns about income and having enough, and the sandwich generation and debt. You know, a lot of Gen X is going to go into retirement with debt. Why do we have some of these fears? Well, we lived right out of college into the dot-com implosion. We lived right out of college. Then after that, as we were starting to recover, into the Great Recession in 2008. Now you look at people that are, you know, people born after that, millennials and Gen Z, they haven't lived it. They haven't felt it. So they have a different perspective. So one of the things that really translates to the way we make decisions is our experiences. The second is the things we read or the things we listen to. So people listening to our podcast, things that have read books like, you know, like Rich Dad, Poor Dad, or Millionaire Next Door, or, you know, things like that. They are going to influence your decisions from research if you're willing to absorb that. And the last is, of course, is being taught, the people that you work with. I just wanted to bring that up really quickly because the most powerful, the most powerful influence on that is obviously going to be the experiences that you've gone through. And no matter what education or training or counseling you get or help and guidance you get, it's going to be a very small percentage of people who are going to be able to overcome those experiences, to be able to push down that emotion and think purely logically from, you know, the decisions that they make going forward. So that was, anyway, that's just something I wanted to touch on really quickly because, again, it's been kind of a theme of our conversation in today. But I want to get back to the Warren Buffett conversation because Bank of America, significant reduction of shares. What does that say? Well, Kirk, we have some more data about another bank that just came out that is potentially very telling, and you know, as it relates to a lot of other economic things going on.
Yeah, tell me, Doug, what's going on with the banks? I know you sent me some stuff. I was a little tied up with the house and the getting back from vacation, but I know that the bank earnings came out. What do you have on that? I was looking for some of the. Actually, you know what? While you're getting that up, let me go over one of the charts you said. I wanted to show. Go ahead. You ready?
No, you go ahead. I'm actually gonna take that thing that we looked at this morning and put it in there.
All right, perfect. All right, so I want to talk about this. I saw this chart from Visual Capitalist. It was great. It shows basically the S&P declines and returns. So it shows from 2001 to 2025. And shows every year what the maximum decline was during that year, and then the actual return for the year. So it shows like 2001, 2002, maximum decline 30 and 34%. 2008 is minus 49%. That it was actually more than that, but okay. Yeah, it's 39, and then peak to trough was okay. So COVID pandemic negative 34%, 22 was negative 25, and then this year went down 19. Now I thought actually it went down 30% this year, but that's okay. It's not relevant. But I think it's really interesting to see some of these returns, and I don't think people really understand the dynamics of what happens in certain years. Like 2011, there was 0% return. That was just weird. I think they had to do it. It was close to that, and I think that Wall Street was trying to peg it just because, just like, hey, it's never happened. Let's do it. But generally speaking, like the market's up 6% this year. I don't know what date this is as of July 8th, so I think it's the market's going sideways. But point being is it's really interesting to see these. I don't think people get an understanding. They just say, oh, it's up or it's down, and they don't really conceptualize historically like how the market performs. Like the US has performed extremely well compared to globally for the last like 20 years. Completely outperformed international. International's been stagnant. I mean, Europe is basically a museum run by regulators, and you've got different parts of the world with different ways of thinking. I'm still very optimistic, even though a lot of I haven't been pleased with let's say what's going on from Trump in the last month. I'm still optimistic that some good stuff will come of it. So there's things like I started hearing more today about the sovereign wealth fund, which actually has been, to be fair, it's actually been talked about for like a long time. It didn't just start this year. But the sovereign wealth fund idea was great. Every other country does it. We had a guest on actually to talk about that, and I thought it was a great idea. The only downside is it's inevitably going to be run by politicians, and politicians are just going to have more money that they can squirrel away and do stupid things with. So, if the Republicans set it up, the Democrats are going to loot it. It's just, and I'm not saying Democrats are the only ones that are going to loot it. I'm sure the future Republicans will try as well. But historically, that's kind of been the trend. So I don't really want to give government more money. I would rather have it run by a different entity that is somehow, I don't know how you do it, because powers that be will always get in there and they'll use it for their own means. So I'm not sure it's a great idea, but theoretically it's a good idea. It should probably take us another 100 years before we, you could use that to pay down the debt, but it'd be another 100 years before politicians screw it up again. So I don't know. I'm not totally optimistic. But Doug, you tell us a bit about the other stuff.
Well, before I jump into that, since you were just talking about the debt and the government, guess what the number one growth job career jobs by sector is? Net change in June 2025.
Department of Education?
Close enough. Government is once again leading the number of U.S. job growth by sector, followed by healthcare. So
good job, Doge.
Yes, I was going to say so much.
What happened to Doge? I thought they were cutting people. I guess not.
100%, which I actually throw in that chart down here if anybody wants to see the top jobs. But yes, government, healthcare, leisure and hospitality. So we're still traveling well. Construction, transportation. Interestingly enough, job losses in mining and logging, which given what's going on with gold, a little bit of a surprise. Wholesale trade down 6.6 that thousand. That's not necessarily a surprise, given that we've dealing with tariffs and it's going to impact wholesale trade and manufacturing. And professional business services are down, which again, it's going to be a line item that gets cut if people are concerned about spending. It's also a line item that's going to be cut potentially with the future of AI. So just a couple of things.
Real quick thing. This is actually interesting. So I want to point this out because if you see the drastic difference between government and everything else, healthcare is up there. I'm actually a little surprised that healthcare has grown that much. But if you really think about it, what if you didn't grow government? We'd be in a recession. 100%. And I'm not saying we should. I'm saying that this has been going on for a while, and it's been keeping us looking good because we just hire more government employees. And then eventually we just become communist where everybody's employed by the government. So really bad trend. Go ahead, Doug.
Well, and it artificially skews GDP, right? Because
Yes.
you are producing something that isn't actually being produced because it's circular, which is where these numbers again. Something I tell my kids all the time. My wife and I tell our kids always think for yourself. Look past this stuff. By the way, so okay, just a little bit of transition back from what we were talking about on the bank side of it. How's this look, Kirk? Wells Fargo stock falls as much as 6.6%. This was yesterday after they had to borrow $200 billion just to stay afloat this quarter. Do you remember something we've been talking about for 18 to 24 months about unrealized capital losses?
And
It feels like it went away. And I said about 6 to 12 months ago that when we looked at Silicon Valley Bank, technically it did implode, but it didn't create this collateral damage, this rippling effect. It had the potential to destroy the entire United States economy because, let's face it, California is a massive part of the GDP. Let's face Silicon Valley has a tremendously higher level of wealth concentrated than most of America because of technology. And a lot of those people use Silicon Valley Bank to hold their assets. And I know this is, for those that listen, this is a little ad nauseum, but go back and look at It's a Wonderful Life. If you've ever seen the movie, he had to actually use his honeymoon money to keep in this wonderful Hollywood glorious. This could never really happen. People want to run on the bank. They wanted their money now. They weren't willing to bank and willing to wait. And as he said, your money's not here. John, Sally, your money's with him, and his money's with him, and his money's with him. That's what you're doing. You're helping them have houses. The reality is people don't care. And they said, I want my money now. And he was able to somehow, with the lack of any type of regulation, use his own personal money to keep the bank solvent.
Totally not how things work.
It's not how it works. But yet it kind of does, Kirk. Because guess what? Silicon Valley Bank, all of a sudden, it became apparent they didn't have any cash. People wanted their money. They jumped in, and the government jumped in and said, wait a second. We're going to inject honeymoon money here. We're going to force the sale of Silicon Valley Bank, but we're also going to create something called the Bank Term Lending Program, which effectively the Federal Reserve stepped up and said, don't worry if you're insolvent. We will lend you money to give you solvency to get through this crisis. Well, the Bank Term Lending Program effectively stopped the insolvency of these unrealized gains, and everything just went hunky-dory. Life was great again. No bank problem. Well, this is the difference between reality and what's hot in the news at the moment, because we've been talking about this for well over a year. The problem didn't go away. Banks are highly insolvent right now. They have, and this is one of the ironies that I'll bring back up and I will continue to laugh about, is the CEO of Silicon Valley Bank. What board did he sit on, Kirk? The Federal Reserve Board?
Oh,
but yet he took Silicon Valley and invested their money in long-term treasury bills. By the way, I'll remind you, sitting on the Federal Reserve Board where he would have inside information to the fact that they were probably going to raise interest rates, which would create the assets of his bank to go into the tank. You sit on the board making this decision. So all of these banks are invested in these treasuries earning 3-4% when interest rates went to the moon. And now they're all, if they have to liquidate them, they are billions and trillions of dollars underwater. Well, Wells Fargo's needed to come up with liquidity. They are one of the biggest banks in the mortgage industry. They started to unwind on this about a year or two ago. They stopped backing and really started getting away from that, a first telltale sign. I don't know where I'll have to do some bigger research to know where they borrowed this money, because they certainly did not borrow it from the Bank Term Lending Program. But it tells you that this crisis still exists. These banks have no way of raising rapid liquidity without selling off assets that are extremely at extreme unrealized capital losses. They will have to go to these treasuries and basically flood a market that, by the way, right now, if you look at If you look at the repo market, you look at what's going on, nobody really wants to buy these bonds. So there is extremely low demand right now. Even on new issues from the government, we're seeing a degrading level of interest in those bonds, which is an impact on the US dollar. Ultimately, we still have Japan out there with their bond market. Right now, it's not just that these bonds would be underwater. There's really a question mark as to whether or not they could even be liquid. And Wells Fargo is showing you in this data that if there is a high liquidity demand, there's very limited places for them to turn. That tells you that both in real estate and the banking markets, we still have these underlying issues. Now, there's a lot going on. Our president says, we're going to overcome all these issues by growing GDP through all of these policies. Cross your fingers, Kirk, that they work, right? Cross them that they work, because they have to work because of what is sitting there in the shadows right now lurking.
Yep. Well, let's bring it home, Doug, because we got lots to do here, and the markets. I will say this before we kind of wrap it up, is the markets have been moving quite a bit. I'm going to try to. A second, I'm trying to pull up this chart. We'll share it just to kind of share what's gone on in the last week, and then Doug can wrap it up. So here's some things that have gone on the last week. I don't know if you noticed. This
to the moon.
This is the Ethereum to the moon. It's pretty much in the last week. It's gone from like 2,600 up to like 3,600 in a week. Bitcoin has gone virtually nowhere. It went up a little bit. Went up to 120,000, broke that. People are all excited about that. If you look at futures, gold has kind of gone sideways, really hasn't gone anywhere. But look at silver. Silver's taken off in the last few weeks. It's gone from like from like 33, now it's up to like 38. That's a huge move. Look at platinum. I wish I was in platinum. It went from like $1,000 down to up to $1,500. It's taken off. Copper it took off. I don't know what happened that day because I was on vacation, but it went from 5 up to 550 in a day. Huge spike. Palladium also spiking up. It's not the same in all commodities. It's mainly the precious metals. Other commodities, the grains, certainly not doing as well. The softs certainly going down. Bonds are basically sideways. Energy is basically sideways. So it's mostly the it's mostly the precious metals that are really taken off. So I just kind of want to point that out because I think people don't pay attention to the commodities, but certainly precious metals, and we've talked about this before. Silver's it needs to play some catch up to gold. So if gold goes nowhere and silver catches up, I know some people have targets way higher. I'm not going to give one on the show because I don't want to bait people. I've already said I own a position, but it's something that I think has been undervalued for a long time, and I think it should be a lot higher. So, but that doesn't mean it'll go up, by the way, just because it should. It doesn't mean it will. But I think people are starting to realize, and it's going to normalize probably at a higher rate. But this is the market. I mean, this last month, obviously, Tech has done well. Apple, Microsoft, Nvidia's done the best. AMD's done well. But for the most part, we're in earnings season. So I want to point this out. We're in earnings season. A number of these companies, the banks have put out earnings numbers. A bunch of other companies have. Oil services, we saw those numbers a few weeks ago. Those haven't done well this year. Healthcare is obviously not doing well this year. But for the most part, I mean, the way we kind of look at it is, I'm going to see year to date. So this is year to date performance. Like many of these stocks have done well. Apple's done poorly. Tesla's done poorly. Healthcare has not done well. Certain software, but everything else has generally done fine. The thing to think about is as we're a little past halfway mark for the year, a lot of people are going to try to play catch up. Oh my God, the S&P's up like 6%. I need to catch up. I don't know that that's smart. What I'm seeing is actually there's some not good signs out there. I'm being very cautious. I'm going with what's hot right now and areas that we've been in for a while. Certainly precious metals and some cryptos, but I'm not seeing a whole lot of value right now. And there will be a point where you'll get some, but right now I'm just not seeing it. So for those of you who are looking to chase returns, good luck. I wouldn't do it, but certainly the rewards go to the bold. So good luck to you. It's just not going to be me. But I do think there will be some opportunities in the fall where things will probably pull back and there'll be some opportunities to buy in. So Doug, why don't you wrap it up and take us home here?
Sounds good. Well, I just posted a couple more things we can run through really quickly as I wrap it up. I did post from the Office of Financial Research, just an idea, just to kind of show you where the securities gains or losses by banks are and their security holdings. We have improved. Good news is we have improved from 2022, but still significantly poor financial losses when it comes to U.S. banks. The other thing, since you just talked about NVIDIA, I posted this kind of fun. It just hit a $4 trillion market cap with only 36,000 employees. That makes its net worth a whopping $111 million for every employee. That's the market cap for employee. I mean, it's just insane growth. And then lastly, something I wanted to point out there as a good segue for a conversation is we know that inflation is an issue. We know that when it comes to loss, we know that people are starting, even at all net worth and cash flow levels, are feeling the pinch to some degree or another in terms of the inflation and where it's been. I posted a reminder of something that I know everybody, at least in my generation, is certainly aware of, and that is the fact that college tuition and fees have gone up just slightly more than the average CPI. Over the last 40 years, Creative Planning posted that we've had a 700.7% increase in college tuition and fees. And that is since prior to 1990. Over that time, you can see that a massive pop of that happened probably right around 2003 on. Interesting enough, again, after most of us graduated. So if you feel like, wow, college is more expensive than I remember it, absolutely true. You can see that the overall CPI generally fairly gradual up until, no surprise, post-COVID, when we had this huge injection of M2 supply that really did drive this inflation up above averages. But unfortunately, the good news is that college didn't really shift a lot. If anything, it's actually toned down a little bit over the massive spike from about 2003 till COVID, but it's still there and it's still going up. So what does this mean? Well, some people listening may know the story, but in 2000, after I graduated college in 97, my father, who was a successful business owner, passed away unexpectedly at the age of 53. And my sister is a few years younger than me. She's 6.5 years younger, and she was 1 year into college. And despite the financial stability we had at the time, now my parents were divorced, there's a little bit of instability there, but we ended up facing unforeseen challenges due to lack of a coordinated plan. And now we've got a lot of new things that have come along. With the recent enactment of the One Big Beautiful Bill, the landscape of education financing has shifted dramatically, and that's on top of this 700% growth in cost. We now have new caps on federal student loans. We have elimination of certain repayment plans. We have increased taxation on university endowments. If you are not aware of what One Big Beautiful Bill did to these changes to college, then you need to do your research or have someone help you through that, because there are some massive adjustments that were thrown into the bill, which means families, especially high income ones, must navigate a more complex and less forgiving system. My company, Mergent Advisors and Mergent College Advisors, that's MERGENT, understands that college planning is an integral part of your overall wealth management. And so we help families integrate education funding into a broader financial strategy, ensuring that your investments in education don't derail your retirement plans or long-term financial goals. So if you have built something that's worth protecting, and you want to ensure your family's educational aspirations align with your financial plans, visit our website. We have Mergent Advisors for General Planning. That's MERGENT mergentadvisors.com, and mergentcollegeadvisors.com. Because here's the thing, smart money doesn't guess, it plans, and we help plan that with purpose.
Awesome. Well, thanks, Doug. Certainly, we got a lot to dig through with the new bill, big beautiful bill, and thanks for helping. We can maybe talk about it in subsequent weeks. But that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth; we make your life better. You can find more about me at innovativewealth.com, and of course, you can find me every week here on the show. Please remember to subscribe to the podcast and podcast app if you're choosing. You can also check out the show at moneytreepodcast.com. On the website, you'll have access to the show notes, resources, and the archive shows. Also, check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a show rating and comment on the podcast app of your choice. Oh, and don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email, express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest